Well, hello there everyone. How you doing on this Super Saturday? It's July the 15th, the year 2023. Yep, hopefully you're happy and having an outstanding day. It's the weekend. Yeah, so if you work Monday through Friday, you got the weekend off. If you're a shift worker, maybe you have the weekend off, or maybe you got to work. But if you're working, look at the pros to working. When you're working, you earn a paycheck. So if you earn a paycheck, you're on your way to getting your first rental property. Yes, you are. No matter who you are, you're on your way to getting your first rental property. And how are you going to do that? It's not that complicated. So before I get started, I am Mazske Finance. I'm coming to you currently from South Florida. I'm not a financial advisor, not a CPA, I'm not an attorney, I'm not a nutritionist, not a doctor, nothing like that. I'm just a blue collar guy who, when he decided to buy real estate, he went from 0 to 25 rentals in 4 years. And he did it using very little of his own money. How did he do it? I'll tell you how I did. I'm sharing stories and experiences on this channel. That's what I'm doing. I'm not telling you to do anything at all. I'm giving you suggestions because I have confidence that the majority of you watching this, if you really want to, can get your first rental, your second rental, your fourth, your fifth, your 10th, whatever you want to get up to. You can do it. Follow my example. I did it. I topped out making $52,000 a year, and yet I went from 0 to 25 rentals in just under 4 years. Okay, so a couple things to do. If you are in a position where you've not yet bought your first rental, okay, you need to prepare yourself. Look at your balance sheet. Look at your budget for yourself. Now, don't compare yourself to me. Don't compare yourself to anybody else. Look at yourself. What is your credit score? How much do you have in the bank? How much cash do you have in savings? How much cash can you access? Okay. If you have a 550 credit score, you might want to work on raising that up, because if you have a lower credit score, you're not going to be able to get the mortgage, or you're not going to get as favorable terms on the mortgage. And the interest rates are already high. So you don't want to handcuff yourself by getting an even higher interest rate because your credit score is too low. You can dig around on the internet and find ways to raise your credit score. The way I raised my credit score was I got credit cards, and I always paid off the balance every single month, because by getting credit cards, I get access to credit. Maybe I'll give you examples. I get $10,000. Okay? If I pay it off every month, I'm showing responsibility that I'm not spending that $10,000. If I got a second credit card, it gives me another $10,000. Now I have access to $20,000 of credit. If I keep the balance paid off, I'm showing responsibility. If I get a third, a fourth, a fifth. Right now with credit cards, I might have $100,000 available credit. My balance is paid off in full every single month. So I have all this credit available, and yet I'm being responsible. I'm not going in debt. I'm paying my bills. So my credit score right now is in the 820s, 820 something. Okay? So if I can do it, so can you, if you want to. So when you look at your own balance sheet and you look at your credit score, you also need to start saving your nickels, dimes, your quarters, and your dollars. Why do I say nickels, dimes, quarters, dollars? Because every dollar counts, okay? You can buy a rental property. If you're buying the hypothetical house for $100,000, you put 20% down, because as an investor, it requires 20% down. That's $20,000 you need saved up. You can do it. Every single working person can figure out a way to trim the fat on their budget and start saving the dollars, because 1 + 1 = 2. The dollars will add up and you will get to $20,000. Along the way, find a savings account that pays higher, a little bit more interest. I personally use Wealthfront. Wealthfront is paying me, because I have some referrals, 5.05% interest. If you just sign up on your own, you'll get 4.55% interest currently. If the Fed raises rates, they will raise their rate. That's how they normally do it, okay? I'm not affiliated with them. I don't work for them. I'm just a customer of theirs, okay? So you're raising your credit score. You're saving the cash. You also need to identify what market do you want to buy in. Are you going to buy in your neighborhood where you live at, okay? If you are, that's fine. And let me throw something else out here. If you own a single family home, or if you are currently renting, a few suggestions on things you can consider. If you own a single family home, where are you at as far as paying off that mortgage? Have you just bought it where you got 95% of the equity you got to pay off still, the balance of the mortgage you got to pay off? Have you owned it where you paid your house off so you own 100% of the house? Could you perhaps take out a home equity line of credit? Home equity line of credit, you're putting your personal house at risk, right? Because if you don't pay it, you're risking your personal house. I did that for my first rental property. My personal residence was paid off. I paid it off in 17 years, okay? And I got a home equity line of credit for $30,000. I bought that hypothetical $100,000 house because I bought one for like $97,000. So, and I did put 25% down because I didn't know what I was doing. So I did put down, say, $20-some thousand in cash. I paid from that HELOC something like $17,000, $18,000 from the HELOC. So I paid less money out of my pocket. Okay, that's how I did it. Not saying you can do it, but maybe you can do it. Okay. Another thing to consider is no matter if you have a primary residence you're living in, or if you're renting right now, could you buy a duplex, triplex, or quadplex, a 2-unit, 3-unit, or 4-unit building? The reason I'm saying this is if you buy a 2, 3, or 4-unit building, you can still get a mortgage for yourself. It's not commercial, it's residential. You can live in the building in one of those units. If you live in the building, you get like a first-time home buyer's loan. I've never done this, okay? If I could do over, I would have done this. I would have done this 25, 30 years ago, okay? But if you do this, it's starting to rain outside. If you do this, you now are living in a unit and your tenants, perhaps, when they pay you rent, are paying your mortgage for you, okay? Some people call that house hacking. You're living for free or you're living very cheap. And your tenant, if you have a duplex, your other tenant is the rent high enough to cover all the mortgage, some of the mortgage. If it pays even half the mortgage, well, that's better than paying it 100% out of your pocket. Okay, so something to consider. All right, so along the way, maybe you're house hacking, maybe you used a HELOC, maybe you work a high-paying job where you're saving $5,000 a month. All right, so again, you go back to, are you buying in your backyard, your neighborhood, where you live at, or are you buying somewhere else? If you're buying somewhere else, or even if you're buying in your backyard, are you going to self-manage, or are you going to hire a property manager? Okay, if you're going to self-manage or hire a property manager, you still got to, when you run your numbers, and I'll cover running the numbers real quick here, if you run the numbers, always account for that property manager, even if you're self-managing, okay? Because when you're self-managing, are you going to like doing this? Is it your personality suited to do that? Do you want to do this? Okay. I self-managed for 5 units back when I was getting started out. I acted as a general contractor and I rehabbed a triplex, 3 units. I hired all the various contractors to do the work for me. Okay. Even though I did this, I didn't like doing it per se. I was always running to my properties, especially during the rehab. I was always running there. I was doing this, I was doing that. Once I got property managers, then it was like, wow, I can just kind of sit back. I still need to manage my property manager, but I don't have to do everything myself, okay? So it makes a difference. So you got to figure out, who are you? What's your personality? Maybe you're great at self-managing. Maybe you are, maybe you aren't. So running the numbers, when you start looking at rental property, you need to learn how to run the numbers. Look at what the property costs, okay? What does it cost? If you get a mortgage on it, 30-year fixed rate mortgage, what's your prospective interest rate on it? You can use online calculators to find out what your principal and interest will be on that 30-year mortgage. You can look up in the jurisdiction where you're buying a house. You can look online, you can Google this, look online, see what the current property taxes are. Usually it's an annual number. Divide it by 12 for a monthly amount. Put it in your numbers. It goes in your mortgage payment. You got an escrow. You could figure out what the insurance will be roughly. You could call an insurance agent, ask them just to give you an approximate, a forecast, a prediction of what that insurance will cost. You can ask other investors, what do they pay? And just do a ballpark estimate. And then figure out what the rent will be. If you have a property manager, ask the property manager, ask other investors, ask real estate folks, just figure out what the prospective rent will be. Now, if you know what the rent will be, and you know what the mortgage, tax, principal, interest, tax, and insurance will be, and you know what and you got to hold out 10%, roughly for property manager, and roughly 20% for vacancies, repairs, and capital expenditures. Okay, if you add that together, it's 30%. Okay, vacancies, repairs, capital expenditures will happen. Repairs are fixing the leaking sink in your rental. Capital expenditure is replacing the hot water heater, replacing the roof. Vacancies, the unit goes vacant and you still have to pay the mortgage. Okay, so you have to hold this money back. It's called cash reserves. When you get a rental property, you have to account for this money and hold it back. Got to pay all your expenses, pay your property manager. So that 30%, the vacancies, repairs, capital expenditures, and the property management fee gets subtracted from the rent. The mortgage, principal, interest, tax, and insurance gets subtracted from the rent. Whatever is left over is your positive cash flow. When you run the numbers, you have to have positive cash flow. Do not have what's called an alligator. Do not go negative. Do not buy for possible appreciation. You're buying for the cash flow. You got to have cash flow. Look at what the yield is. It's a mathematical formula. It's easy to do. Just figure out what the yield is. Are you making 10%, 12%, 15%, 18%, 20%, 30%, 40%? I have some houses I'm making 8% on because I pay cash for them. I have some houses, my best house, I'm getting 52% annualized cash on cash return. Okay, and I have different numbers in between. I have 40%, I have 25%, 28%. It varies. Okay, my rents have gone up, my mortgage stays the same, or it's paid off. Okay, so I covered a lot of things in a nutshell, but I'm telling you, I'm here today to tell you, if you have not bought your first rental, you can do it. I have confidence in you. You just have to want to. You got to have that motivation, that grit. Okay, if you already got your first, your second, your third, your fourth, if you're kind of stuck, like I'm kind of stuck right now with mine. I'm in the 20s and I got mineral rights and I got oil drilling, this and that, but I also got a really nice house and I got an expensive mortgage. So I'm selling my house. Some of you have been to my house. I have a nice swimming pool. I put it in videos. I have a nice dock and a tiki hut and a boat lift down there. I'm on the water. It's a beautiful place. Beautiful place. I have it for sale. Why? Because I know by selling it, it's going to free up cash flow for me and I will be able to ramp up my investments better than what I'm currently doing. Okay? So that's what I'm doing. I'm making a big change in my life. I'm going to move outside the United States once I sell this house because I want a lower cost of living area. Plus, I've been to this country and I love it there. You'll see me make videos down there because I've made videos already there. So with that being said, I'm wrapping this up. Post comments below if you got any questions. Let me know what you want me to talk about on my channel. I've been busy, busier than ever here of late. I'm going to stay busy for a bit, but I will make videos when I can. Thanks so much for watching. Thanks so much for clicking the thumbs up and subscribing. And with that being said, Mazske is signing out.